All right. Call to order, budget meeting, virtual town hall budget meeting for Monday, May the 10th, 2021. So welcome to everyone watching on Facebook. Thank you to the Hub Online Network for live streaming this town hall meeting, which is the second one we're having about the 2021 budget and 5-year financial plan. We invite anyone watching to please submit their questions via the comments online. Those will be read out at the end of the presentation. So without further ado, I will turn things over to Chief Financial Officer Yogi Bala, who will take us through this year's budget and 5-year financial plan.
Hello everybody, welcome to the meeting. So this is a statutory town hall meeting covering last year's results and looking forward to the next year 5-year financial plan. So a bit of background information, what I start with every year. We are required by the community charter to have a balanced budget, and we balance our budget every year. The way our accounting works is a separate standard under PSAB rules, which is called fund accounting, where things are separated into a general operations account, water operations accounts, sewer operation accounts, and reserves. The general fund looks after public works, streets and roads, protective services, solid waste, administration, and recreation. The water fund is concerned with delivery, treatment, and infrastructure, water infrastructure, the pipes, all the pump houses, and all the reservoirs. So everything to do with water goes into this side of things. The sewer fund is dealing with all the sewer assets. It looks at collections, treatment, infrastructure, pipes, lift station, and the treatment plant. Restricted assets and reserves. Most of our funds are restricted for specific uses, and these include Capital Works Reserve Fund, which deals with basically aging assets and having to replace our core assets, reserves set aside for that, and we put money aside every year to make sure we set something aside for any challenges we might run across. The sewer fund is for sewer related work, the water fund for water related capital work. There's a machinery and equipment reserve fund which we use to buy common machinery such as trucks and other equipment, and that's we set aside money, try to set aside money annually for that as well. There's a perpetual care reserve fund which is exclusively set aside for the cemetery, maintaining the cemetery and keeping it going in perpetuity. That's why it's called the perpetual care fund. The fire department reserve fund for fire department things, and a transit reserve fund for our transit system. In terms of asset breakdown, this looks really small on my screen. I hope you guys can see it. Of the about 5 million assets, over 4 million are restricted assets, and about 700,000 are unrestricted, as in surpluses which we can use for deficits to offset deficits or in our annual operations. In terms of breaking it down further, the restricted assets, the biggest portion is the Capital Works Reserve Fund, of course, because it covers all our classes and sudden changes. Then the second largest part is the water surplus and the water reserve, followed by machinery and sewer reserves. We've got a bit of Curling Club reserve was used for the Curling Club maintenance, so there's very little left in there. There's a fire department reserve. We just use funds from there to pay off the fire truck loan, and we'll be rebuilding it for future use. So we've started rebuilding it, and then there's a transit reserve with about $90,000 in there. 2021 financials. Okay, and The financials are divided into assets and liabilities, and I should say 2020 financials. We're looking back, and we'll go looking forward to the budget later. So our financials are typically, as most financials are, they're asset and liabilities. Assets include cash and short-term investments, which we keep with Municipal Finance Authority, which is a government arm. So we are very restricted where we put our cash and short-term investments. They're very secure investments, so we do not invest in things like Bitcoin. Just to be clear, we've got account receivable and taxes and utilities receivable. On the liabilities end, we've got accounts payable and accrued liabilities. And accrued liabilities are things like payroll accrued towards the end of the year, things like that. And there's a account this year for tax sale proceeds payable, which carried over from last year, which got paid off this year as the tax sale process went through. And there's some deferred revenue in our accounts as well. In terms of where we are compared to the prior years, from 2019 to 2020, our assets remain quite stable. We were down less than 100,000 on the asset side. Our liabilities, though, went from 1.7 million to 734,000 at the close of the year. So this was primarily due to paying off our debts, and I'm moving forward with that. So the two debts we paid off was the water treatment plant debt and the fire truck debt. So as of now, the village is free of any short-term or long-term debt. On the equity and reserves, we've got financial equity. If you look at our statements, which include surplus from operations, the statutory reserve funds, and the other reserves set aside for future expenditures. On the capital equity, which is the tangible stuff, we've got land, buildings, engineering structures, and machinery and equipment. Our business is very capital heavy, so we tend to have a lot of capital assets. Tangible capital assets are shooting up. You've all seen the water treatment plant having been built and functional, which saved us quite a bit from the freshet this year. We had pretty high turbidity, but we had no boil water or water restrictions because our filters were working great. But we have had to enhance some of our water treatment plant assets to deal with the additional sand and inorganic stuff which is coming down the river much more than it used to. So that's, there's some works we're still doing to add filters, etc., to the plant to keep it going. So our tangible capital assets went from 14.6 million to 15.25 million, so an increase of just under $1 million there. So just our operations and all our work we've been doing is adding to a capital asset base. Okay, moving on to revenue and expenses for 2020. Revenues were higher than expenses. You always want to see that. Our revenues were 4.8 million. Our expenses were 3.3 million approximately. The remaining amount goes to reserves and everything else till our budget is balanced. Our primary sources of revenue is municipal taxation. You need to remember when you get your tax notice, which would be soon, end of May, is that we only collect half of that. The other half goes to other levels of government, including school tax, police tax, and we just collect it on their behalf and forward it back to them. Then we collect revenues as sales of services. Government grants have gotten quite important, and we've been quite successful in getting them. And then there's license permits and penalties. Revenue for 2020, the largest chunk actually was government grants, followed by municipal taxation, and then sales of service. And sales of service includes your utility fees. So it's not, so they count that as sales of service because it's a service we provide you, and it's separated from taxation. And then permits and penalties were the rest of our revenue. Expenses, there was government expenses, general government expenses, there's protective services, there's transportation, which includes road maintenance, sidewalk, all of that. There's environmental and public health services, and which includes cemetery, all the public health things we do. There's recreation and culture, and there's water and sewer. In terms of size of expenses, the highest expense is, as you can see, water and sewer. And this is slightly is affected by the project work we're doing as well. But that's water and sewer. Followed by, funny enough, recreation is a huge part of our spend. We have a lot of recreation facilities. We continue to operate it despite challenges over the last couple of years. The pool is set to open. So I'm excited about it. So it's very nice moving forward. And then the other expenses are transportation and public health, environment and public health at $270,000, and general spending, which covers everything overhead, doing all the office work, is $450,000. Okay, switching gears now, going from past to the future 5-year plan. And I think I may have got the date wrong there again. It should say 2021. So the actual numbers actually say 21 to 2025. That's our 5-year financial plan. That's just looking at the revenue side. The first year we do a detailed budget, which is the process we go through, and we had the meeting about that. That translates into those figures. And then the year 2, 3, 4, and 5 are just projections of that. And the further you go, the less certain it is, but we try to project out to see what's happening, and those are the figures for the 3 years. Our total revenue we anticipate coming in at about 6.9 million, and nearly half of it is government grants. Yes. So just to put that in perspective, it will decline going forward. We don't anticipate. The projects are still in full swing, and we're busy doing everything and filing everything and getting the work done. So we anticipate those funds coming in this year. On the expense side, it's the opposite side of that. It matches, if you look at the bottom line, 6.9 million. On the revenue side, matches the 6.9 million. I'll take the mouse. Hopefully you can see the mouse. Matches. No, it's not visible on the screen. It matches the expense side. So budget has to remain balanced, and is projected to be balanced through year 1 to year 5. So that is the 5-year financial plan. I'll go back to the revenue and cover it in a little bit of detail. We'll talk about taxes. The property taxes are forecast to be 1.295. That's just our portion. And we are budgeting only 2.5% increase. Last year we had no increase. This year is 2.5. We keep that increase. The council keeps that stable. The decision has been made that we keep as much as possible our tax increases stable, just to be able to deal with inflation and rising costs, and have no surprises. We try and plan forward, and we go through this process so you don't have surprises where taxes are increasing all of a sudden. The rest of the items, there will be no further increases. There are no further increases set up for utilities. Those increases have come to a close, and they'll carry forward. So it fits into sales of services, and which as you can see will remain fairly stable going forward. Sales of service and user fees. So not anticipating increases. We've done our increases. We've been able to pay off our water treatment plant and move forward, and we're in a good position to move forward. On the expense side, capital expenditures is the biggest item, followed by the general municipal fund and water and sewer, water being 603,000 and sewer being 399,000. Okay, moving forward, how the property taxes are calculated. So assessed values are are the basis for property taxes, and the assessed values are determined by British Columbia Assessment Authority. It's independent from us, so we don't go ahead and determine it. We get the values from BC Assessment, and those figure into the taxes. What is the British Columbia Assessment Authority? It's an independent provincial crown corporation. Mandate is to establish and maintain uniform real property assessments throughout British Columbia. Assessors determine the market value and enter those values on assessment roll, which we get downloaded. And I try to download the latest roll to capture most of the changes before the taxes go out. The taxes payable themselves, and this is something I still run into, we determine what taxes, how much taxes are going to rise. So we've determined taxes are going to rise 2.5%. In this equation, that's item C. Assessment is item A. It can go up and down, but we'll change the tax rate B so that C doesn't exceed 2.5%. So if you find your assessment has shot up, your tax rate will go down, so your taxes don't shoot up. So a lot of times people think, oh my gosh, my assessment went up, my taxes will go up. That's not how it's one part of the equation. We will reduce the tax rate, so you get, on average, if your assessment went up average amount as everybody else, your taxes will only go up 2.5%. So the ones whose assessment has increased beyond the average, of course, they will have that difference, right? So this is the equation we use, and so our taxes is C, what we are determining, and that's at 2.5%. Taxes payable, no municipal increase. I don't know what I was thinking there. The increase was from last year, 2.5%. So last year there was no municipal increase. This year there's a 2.5% increase. So actually last year there was a slight decrease because there's something called, I'm not going to try and complicate things, non-market change. We didn't charge for that either. And that's just new construction being built. The average assessed single family assessment was 254,583. That's a single family house. There were different categories, and that's an increase of 10,474. Average single family tax increase is $14.23 this year. So just to keep that in perspective. Even the residential class has single family, there's vacant, there's agriculture, there's a number of classes. There's multifamily. So I focused on, this is the one which is of most concern to most of our taxpayers, so I focused on that. Here's the details. It looks big enough. And so it gives you different classes, and the one I was focusing on was the single family with the 610 properties here which we're taxing. Lots of material coming at you quickly. Please feel free to ask questions, and I'll flip back to the slides so I can talk about them. Oh, and I kept the data from 2015 to this year, and you can see the changes as time has gone by. So 2020 there was a $0 increase, and 2021 the single family has gone up $14.23. So we've maintained our, while I've been working here over the last 5.5 years, we've maintained a steady tax basis and kept things stable. Projects, we've got, and we talked about this in the last community hall. Projects are ongoing. We anticipate 1.2 million in additional capital works. Water treatment plant is on phase 2. By that we mean we're doing a separator, and we've finished the chamber. The separator part of it is starting to get going, and that will really help us with the sand coming through the water these days. It has an impact on our equipment because it's like abrasive. It really beats up our equipment. So we decided to get a pre-separator to try and remove a lot of that. There were curling club upgrades. We undertook evacuation route planning. We've done a fair bit of work on asset management, and there's a number of maps which are now being used quite often in GIS as well on our village website, which are often used by both by the public and internally. So it's been a success. And we did a sewer plant SCADA, and this is not an all-inclusive list. This is a lot of stuff going on. Okay, that comes to the end. Lots of stuff, and I've gone through it quite quickly. So I hope there are questions.
All right, thank you very much, CFO Bala. And does council have any questions or comments? No? All right, are there any questions or comments from anyone watching at home?
I do have one question, but I don't think it's from this presentation. She references page 11 of the agenda. It is about the financial plan.
Okay, go ahead. Let's see whether I can, but we'll try. If not, it doesn't fit here, we'll try in the next.
So page 11 of the financial plan, I'm guessing, or the agenda package, I'm not sure, it doesn't specify. Capital expenditures are quite different for the 5 years. 2.8 million, then 714,000, then 65,000, then 65,000, then 165,000. Why such a difference from year to year?
That depends totally on what the projects are happening. So as we are spending on projects, that's when the capital expenses will happen. We likely won't keep this pace of capital spending going. So that's why it declines quite precipitously going forward. So we are hoping to conclude a bunch of things this year. We might end up, we'll keep applying for, just to put that in perspective, we might be applying for more grants, which will again change the numbers there. But at this point, going forward, it declines because we're not.
Okay, another question. In the financial plan, for what are the parcel taxes of 168,500 each year being charged?
So these actually, when you look at your taxes, you see a parcel tax, and it's based on frontage. And these taxes are basically to support both sides of utilities, water and sewer, setting it aside for future expenditure, or covering things like interest on capital costs and things like that. So when it's not used for that, it's set aside in a reserve.
Is that all?
I'm just asking her.
Should we take a couple of minute break just to give
Sure.
people? Okay, we'll take a 3 to 5 minute break just to give people a chance to compose any questions they have based on CFO Bala's presentation tonight. people at home.
All
Okay.
right, we've got a couple more. All right, a couple more questions. In the financial plan, page 12, an asterisk says it includes 17.65%, 187,918,000 for capital replacement reserve funds, but there is no asterisk in table 1. Please clarify.
I'm not sure which table 1 you're referring to. The asterisk is, so of the property taxes we collect, we put 17.85% to that capital reserve fund every year to build up our capital reserves. That's immediately taken off our assets, so we don't see it. It comes in and goes right away into our reserves, and that kind of helps saving first, sort of, for things. So what is left is, we know what we can work with.
Okay. In the financial plan, the village gets a lot of money through grants. The grant monies go down from 3.3 million to 850,000. Does the village not intend on applying for as many grants?
Yes, we do, and it's a rolling grant process, and it tends to be fairly short term, a year. There's certain grants which we receive on a regular basis, and I'm fairly conservative in how we deal with this. I will count the basic grants like the community grant, which we get every year, small communities grant, and some other grants. So those portions are the standard annual grants we get. Anything additional we are applying on a rolling annual basis, and so that depends. That's why there's such a variance and falling down of grants, like reduced grants as well as reduced capital spending. So whenever the grants are going up, you will see higher capital spending as well. But I do not forecast until I feel there's some certainty in receiving those grants.
Right. And it's fair to say, too, that grants, we don't know what grants are going to be offered in 2022 or 2023 or 2025. So, A, you can't bank on grants when you don't know what grants will be available. And second, going for grants is very much based on our strategic plan and what council of the day considers to be its priorities. Because if in 2023 council decides that a priority is X project, then grants for X project will be looked for in 2023. We can't predict either of those two things now.
That's right, and though we do a lot of pre-work in terms of the strategic plan, in terms of asset management, to help us put together the material for grants. So we are proactive in that sense, that we prepare and we know what we want to apply for, which helps us in our applications. But we don't know whether we are getting grants often till, sometimes even most of the years gone by before we'll have notification. So I do not account for it in forecasts until there's some certainty around that.
Right, thank you.
Next question. The report talks about property taxes versus user fees as sources of revenue, where user fees are used for services that can be measured and charged on a user basis. This seems fair. But how is water charged on a user basis when there is no metering in the village? I would think that a family of 4 uses 4 times as much water as a single person, but these 2 different households still charge the same. This seems an unfair practice.
Well, we've never had meters before, so we've charged on a per household basis depending on category. So we've been able to split it into commercial use or household use. And yes, a household with more individuals will use more water. We haven't put meters into place, and as I was discussing the issue of meters in our community forum, the cost of putting that in place is quite high, even if we get grants, and the annual costs of maintaining, measuring, accounting, tracking, fixing, it adds up. So we've gone through this 5-year process where we raised water and utility rates. We finally come to end of that process. We've been able to build what was required by the Canada Drinking Waters Act to build those treatment plants, and fortunately, or with lots of work, those projects have gone quite well. The community would like to keep, what I hear is, water and sewer rates stable and at a certain point now, and we are so far not looking at meters because that would add a significant part. Yes, it could improve the fairness if we knew who was using how much exactly water, but we do the best we can with the system we have in place right now.
Thank you.
I am wondering about the expense. I am wondering about. Oh, okay, let's try again. I am wondering where the expense line for road maintenance and repair is. Does Ashcroft Terminal have to pay anything extra for the road maintenance of Evans Road since it is a heavy traffic from the port that is using it?
Ashcroft Terminal pays taxes, and they're based on their assessed values of the construction there. And as they build more, they will be charged more in taxes. They do not get any services other than for water sewer, but for road maintenance, that is covered under the general revenue and is paid from general taxes.
I am wondering about carbon offsets. Last year, the village was going to stop buying carbon offsets and change this way of being carbon neutral by actually doing something to reduce greenhouse gas emissions. We all know that buying carbon offsets is just creative accounting. Is the village really committed to reducing its greenhouse gas emissions? And if so, how will this be done rather than buying offsets?
Well, we didn't commit to not stop buying offsets. First thing I'll correct there. It's the most economical way for us to reduce our carbon imprint. And it is not just an accounting exercise. We do buy it off a certified company which invests to reduce carbon. And as far as reduction of our personal, the municipal use, we've taken steps. We have a fairly large solar array on top of the water treatment plant. That was a new part of the construction now. We are always consistently doing retrofits and trying to reduce our usage of energy. The whole arena retrofit has tremendously reduced consumption there. We've done retrofits up on the sewer treatment plant. And so we continue to do things while balancing the financial impact of it and moving forward. So,
And the curling club refit that.
and the curling club refit. Thank you.
That was huge.
And the pool as well. Thank you. So
pool,
it's an ongoing set of projects we are constantly working on, and the pool also has a solar array, and also has a heating part to it, or solar water heating. So we look for opportunities.
Thank you.
In the SOFI report, and the former CAO received $38,750 in severance. She was not terminated prematurely, dismissed. She worked less than a year. She abandoned her position for personal reasons. Why did she get severance, and why such a substantial one?
That is covered under the terms of her employment contract, which we are not at liberty to discuss.
And last question from this person. I am wondering where the extra funds for salaries are coming from for the 3 new positions, as well as the severance package and the bylaw enforcement officer.
So we've hired Public Works, and that is, we've also had retirements in Public Works, so there's no new positions as of now. Our workload has definitely increased, so we might have to look at, because we're doing a lot more at the village. The office position in the office is offset by a grant, and which third position are we talking about?
Could you read the question again, please?
Maybe Daniela's position prior to becoming?
Yeah. Yeah.
No, I know.
Okay, so stepping back, when I did an analysis of the positions, there were some positions which are not in place, like the deputy corporate officer, and our reorganization did not have a net negative impact on the village.
And then the severance package and the bylaw enforcement officer.
The severance package was already discussed by the mayor,
Yep.
and the bylaw enforcement officer is a shared function between 3 municipalities. There's been a lot of requests to council to have that position, and that position is again managing the whole organization. It's not resulting in additional expenses.
Okay. And then there is one more question on Facebook. When is the road coming up to the Mesa Vista going to be fixed? It needs to be fixed as you start to come up.
We are well aware of the road, so we've tried to start the road reserve to try and put some money aside. This year we are increasing the road budget significantly to do batch repairs. So on railway starting, I believe, and Brian can add, starting where the tracks cross to a section further down will be repaved. Paving is very expensive, so we need to start setting aside funds. It's one of the priorities which has been identified in the asset management plan, where we have weakness, and council is quite aware, and we're trying to start setting aside money to start repairing things. But road repairs are exceedingly expensive. It actually surprises me how expensive it is to repair roads.
And I think another thing you've identified with the asset management plan is there is no point in repaving a road if within months or a very short time you're going to be digging it up to get at the infrastructure and the assets underneath it. So it's important to know through the asset management plan that CFO Bell has prepared what the state of the assets underneath that road are before we spend a lot of money paving that section of road. Because as I say, no one wants to go out and have to dig it up 6 months later. That's all.
Okay, thank you very much for your questions.
All right, thank you very much, CFO Bella, for excellent presentation and explaining it to lay people and making sense of the numbers. And thank you all for being here. Yeah.